Hey, good morning, everybody. It's Mark Johnson at Guaranteed Rate, and it's great to be with you today. Happy St. Patrick's Day. I've got a little bit of green on the shirt. Haven't worn it forever, but anyway. Last week, interest rates, pretty much stayed the same. It opened up the week, going down, and then there was some inflation numbers that came out, and that looked pretty good. And so let's just kind of look and see what's happened here. The Freddie Mac average was 6.65%, which is up 2 ticks from the week before. It was 6.6, excuse me, it was 6.3, 6.63 anyway. And so it's just kind of gone up just a hair, not a lot. The 10-year Treasury has been trading in just such a really fine line right here, you notice. So this was last Monday when rates kind of took a dive here on Tuesday, and then with some of the inflation numbers that came out, it was good. But then there's this floor or ceiling of support. It just can't quite get over that. And if it does, there's a lot of room on the uptick here that might be able to help interest rates. Here's the bond market where we buy money. You can see that interest rates are just going up just a little bit. When this goes down, interest rates go up for us. So hopefully we can get above this line here at 101.39, and then you've got some nice space here without really any ceilings until we get to 101.71. So a lot of people are just asking me, hey, can you just really just take a minute to explain the consumer price index to me? I just don't understand, how that works. So let me just take a few minutes and go over the numbers that came out last week. So inflation pressures basically moderated a little bit in February, and the January job openings exceeded the expectations. And so that's why interest rates really have kind of stayed steady. However, with close examination of the data, it uncovers some important signs. So let's talk about a few of these. Let's start with the consumer inflation progress going a little bit lower. So following a surge in food and energy costs that drove inflation higher in January, February brought some encouraging data with both the headline and the core consumer price index, or CPI. Headline rose by 0.02% month over month, while the year over year dropped from 3% to 2.8%. That's good. But I think people were looking for a little bit more. The core CPI, which includes food and energy. So the headline takes out that because it's so volatile. And then the core, the core CPI includes food and energy. That increased 0.2% month over month, but it softened from to 3.1% year over year, which was down from 3.3 the year before. So, that's kind of the bottom line when they're looking at the inflation data that the Federal Reserve kind of is looking to see and get down to 2%. That's their goal. Now, what's the bottom line? Well, the shelter component basically remains a primary contributor to the ongoing inflation pressures, accounting for 35% of the headline CPI. In other words, that's without food and energy, and then 44% of the core CPI. This is significant because the shelter costs are pivotal in inflation and the trajectory of how it's going to influence inflation. So that being said, if homes go up in value, then that's not going to be good for the economy because the Federal Reserve is trying to get inflation down, and home prices going up is inflationary. However, if interest rates come down, you're absolutely going to see home prices go up. So it's kind of a two-edged sword. We want rates to come down, but also we don't want home prices to go up. Now, let's talk about job openings. In January, there was a significant decrease from December job openings. And so they rose from 7.5 million to 7.7 million, slightly surpassing expectations, which means that this increase was particularly noticeable in retail and finance sections, as well as professional business services and leisure and hospitality. All those had just a little bit of declines. However, as you know, with the layoffs that are happening with the federal government, that could even go up quite a bit. So what's the bottom line? Although January registered an uptick in job openings, the data reveals underlying weaknesses in the labor market. Overall, job openings continue to trend downwards, considerably below the peak of 1.2 million in 2022. So let's talk about jobless claims. That's also a component that can help lower interest rates. So the initial job claims dropped by $2,000, landing at 220,000 job claims for last week. That's pretty stable overall. The continuing job claims saw a decrease as well, falling from 27,000 by 27,000 to 1.87 million. However, it's worth noting that it's hovering about $1.8 million since last June. So there's not a heck of a lot of changes there. The bottom line is that new unemployment claims continue to be historically low, but persistent in elevating in the continuing jobs claims, suggesting that job seekers are looking much longer to find a job. So anyway, it's taking longer for them to get unemployment. Anyway, the bottom line here is that it is very difficult to project where interest rates are going to be. Are they going to be lower next week? It is hard to say. So if you're in the middle of trying to decide whether to lock in your loan or not, I always say, be safe, lock in. If rates do tumble down, generally on most kinds of loans, we can reduce that interest rate and renegotiate it for you. Now, today's market was brought to you by How to Save Money for a Down Payment. So a couple of things. I was talking to some people the other day, and I told them, look, you need, set a savings goal. You need to kind of know how much you need to save for a down payment, and then make sure you create a budget and stick to the budget. So it's easy to create a budget and then see where you can cut, pennies and dollars from streaming services that maybe you don't use and things like that. And then you'll be able to save a little bit more and get the home of your dream. In some cases, there are loans with zero down payment. If you're a veteran, there's no down payment on that. If you're a first-time home buyer, or even if you're a second-time home buyer, Utah Housing has some great 0% or almost 0% financing programs out there. And then Farmers Home Loan too also has that. So anyway, if you have any questions, don't hesitate to give me a call. I'm here to help you. My number is 801-792-7777. Have a great day.